Hello, families. Welcome back to the American Family Survival Network. I'm your host, Jeffrey Snipes. Gold, the End Game and Headwinds by Stewart, Thomson. The next crisis will be a full deleveraging event that involves both public and private assets. I call it the End Game. As it unfolds, I expect markets to act more like they did in 1929 than 2008 and end with gold reevaluation. Submitted by Stewart Thomson with Graceland Updates. The U.S. jobs report is scheduled for release at about 8:30 a.m. on Friday. As I've noted many times, gold has a rough general tendency to trade lower in the days before that report is released. When the report is released, gold tends to trade wildly. In the days following the report, gold has a general tendency to move higher. Number 3, double-click to enlarge this 8-hour bar gold chart. 1Q, gold is drifting lower ahead of this jobs report. The article is a little bit dated. It's a couple days old, but today is now Saturday morning, so it'll be interesting to see what gold does on Monday. Number 4, I realize that many investors in the gold community are wondering why gold is soft during what is usually a strong seasonal period. Number 5, it's important to understand what creates the seasonal price action. The Indian love trade is the major factor, and Indian farmers are the main buyers. They are very averse to debt like the Western gold community is. Number 6, these farmers are coming off back-to-back years of serious drought and low crop yields. This yield's crop is good, but the farmers are focusing on paying back their substantial debts that accumulated over the previous 2 years. Number 7, the bottom line is that Indian love trade demand is not likely to return to normal until 2017. Number 8, gold is well supported by the love trade, but it's not the main price driver right now. And gold does face light headwinds in addition to the demand weakness in India as the U.S. jobs report. Number 9, you can double click. I'll put the link in the video description. The price action for the dollar versus gold is highly correlated to the dollar's action against the Japanese yen. Number 10, unfortunately, this daily bars chart shows a potential upside breakout for the dollar against the yen. Given the massive decline in the dollar over the past year against both the yen and gold, a rally is to be expected at some point. Number 11, as I've mentioned, gold is very well supported, though, mainly by what I refer to as the competitive cost of carry trade. Forex money managers view gold as a competitive currency. They are buyers, but not because gold is about to rise dramatically. Number 12, they simply like gold as a competitive currency. Number 13, double-click to enlarge this 8 hours bar T-bond chart. That'll be, again, in the link in the description of the video. Number 14, the T-bond has been drifting lower since early July, and so has gold. That's not a coincidence, and it's not another modest headwind for gold. And it's another modest headwind for gold. Number 15, if Janet Yellen had raised interest rates aggressively this year, it would have had incentivized banks to move the enormous QE money ball out of the Fed and into the fractional reserve banking system. Number 16, that would have created significant inflationary pressures, and gold would benefit. Instead, Janet has yet to do anything, and so the main price driver for gold continues to be the cost of carry factor rather than inflation. Number 17, a drift downwards in T-bonds raises the cost of carry for gold without affecting the money ball sitting at the Fed. That means gold could continue to trade in this sideways drift with a downwards bias until Chinese New Year buying begins in December. Number 18, empires are born and empires die. Right now, the American empire is dying, and the empires of China and India are being born. The death of the American empire is not caused by debt or even demographics. It's caused by time. Number 19, there's a time to live and a time to die, and it's the American empire's time to die. Insane levels of debt and entitlements do appear as an empire reaches the end of its life. But reducing those debts and entitlements doesn't change the fact that it's time to die. Number 20, the 2008 super crisis involved limiting, deleveraging, and massive transfer of leveraged assets from the private sector to the public sector, the central banks. The next crisis will be a full deleveraging event that involves both public and private assets. I call it the end game. 21, as it unfolds, I expect markets to act more like they did in 1929 than 2008 and end with gold reevaluation. And the 1930s gold reevaluation was really a reevaluation of U.S. government gold and a devaluation of the American citizen. The reevaluation will be best described as a reevaluation of the gold held by Chindian citizens and a massive devaluation of the citizens of the Western world. Number two, 22 business cycles tend to last about 8 years. The current upcycle is long in the tooth, and as it ends, the end game winds will begin to blow. Opportunities for gold to stage a parabolic price advance only occur about once every 8 years, and the next opportunity is coming soon. Number 23, in the meantime, the general theme of transition from deflation to inflation continues. Again, the link will be in the description of the video, and you can double click to enlarge this daily bars GDX chart. Like gold stocks are well supported here, but likely to drift a little lower for a month or two. The $22 area for GDX is a key buying area. Number 24, double click to enlarge this important oil chart. Oil is by far the most significant component of commodity indexes. The OPEC deal is just another indication that oil is poised to begin a major move higher in 2017. This will bring new inflationary pressures to the entire world and a new wave of inflation-oriented gold stock buying from the world's mightiest institutional investors. And Stewart Thomson is offering a special offer for website readers. If you go to GracelandUpdates.com and email him free reports 4@GracelandUpdates.com, he'll send you his free Grease My Gold Stock Wheels report, and he covers 5 hot gold stocks that are rising while the sector swoons, and 5 red-hot oil and gas stocks that are in rally acceleration mode, with key buy and sell points for all of them. So thanks and cheers from Stewart Thomson over at Graceland Updates. Thank you very much. Appreciate that, Stewart. Folks, please remember to go to the AmericanFamilySurvivalStore.com for all your family's emergency and survival needs. And please remember to protect and safeguard your family. Fear not, and God bless. Thank you so much. Have a great day.